All right, there we go. Sorry about that. My audio was off. Fixed audio. Fixed audio. Sorry about that, folks. How's everybody doing? I'm not sure why. OBS is doing that for me, but I was able to fix it. How's everybody doing? Happy Halloween. Nice to see you. Like I said, we're here to look at some spooky action. We're here to look at the Bitcoin price action, and that's why you're sitting here looking at a guy in an orange mask dancing for you. As I said, that's my anthem. That's my intro song, Church of Eight Wheels. I like to set the tone where I like to have some fun. And, that's why I do this. And I try to connect with you folks as often as I can while still maintaining my own personal work-life balance. And also respecting the fact that I am, of course, a founding analyst at Bitcoin Live, and I've been doing the market reports there for 8 years. And I try to save my best analysis for Bitcoin Live for sure, but I also try to do as much free content as possible. You see me kind of spamming stuff on Twitter and, of course, on YouTube here at Cheds Trading. That's why you're here. The Trading Encyclopedia is probably my latest offering, that I'm really just put a lot of effort into, and I hope you can. I hope you take advantage of it. I hope it lands. I hope it makes a difference and you enjoy it. Because if you go there, I just had a question, in the chat room before the video about does the on balance volume work with hidden divergence? The answer is no. And I have a video on divergence. I have a video on regular divergence. I have a video on positive divergence, which is reversal. A video on a negative divergence, hidden divergence, pardon me, which is continuation. And then I've got video on OBV. I've got videos on throwback. All the stuff I put out, it can get a little bit overwhelming. It can be a little bit complicated because I've studied all the textbooks, not all of them. I've studied a lot of them, and I've done CMT. I'm doing CMT2 right now. I'm reading that book. And I'm trying to give you folks a good guide to my content, trying to give you a good guide to what I'm saying on Twitter and on YouTube. So just soak it up. But I try to go live once a week, even though, like I said, Bitcoin Live is my priority. I do those Wednesday and Sunday night. And I'm a founding analyst there, by the way, with just a great team. I try to at least touch base with you folks once a week here. So if you're watching live, it's great to have you. Nice chat rooms filling up. And if you're watching on replay, it's, cool. Thanks for hanging out anyway. So get your questions ready. If you're watching live, you just hit sub, hit like, whatever. But you can just drop me a message in the chat room. And, I'll get to it. And I'm going to talk about Bitcoin, Ethereum. We'll do some of these altcoins here. Just to remind you, of course, I'm on Twitter at Big Cheds. Check out BingX, my favorite exchange. I've worked with them for 5 or 6 years. They're really solid. So if you're looking for somewhere to trade, check out BingX. Check out all the stuff on my YouTube. I just did an interview this week. I don't know how many of you have seen. Let me know. Have you guys seen my interview with Chartman Dan? It's 90 minutes. It's outstanding. And this guy is just I will say he's a mentor to me. He's someone I look up to. And we had a really good conversation where I tried to flesh out new traders are going through. I really think you guys will enjoy it. Also, definitely check out my other recent interviews, Fibbo, Jason, Pizzino, Checkmatey, Follis. And so I have more coming, so check that out as well. Enough about that. So what's going on with Bitcoin? Well, we're at the daily MA200, right? So how do you know, just a little bit of review. And I know some of you are here all the time and you know this stuff. And I know some of you, you don't see my work and you don't know how I approach the market. I use classical charting a lot. And in classical charting, the trend is that the daily MA is the MA200, which is the simple moving average, which means it's an equally weighted moving average. So it's 200 periods. That's the blue line here. And if you have a price above, so if a rising MA200 price is above it, it's an uptrend. If you have a rising MA200 price is below it, it's an unconfirmed uptrend. If you have an MA200 falling with the price below it, that's a confirmed downtrend. MA200 falling, price above it, unconfirmed downtrend. We're pretty much right at a confirmed uptrend. We're right there. We're right at the daily MA200. So it's testing deep support in an uptrend. And certainly one way to look at it is just price versus moving average interaction. A lot of stuff I talk about with moving averages, especially if you're doing something like the first test of a long-term moving average. I talk about that in Trading Journal. I talk about that in the encyclopedia, you want to kind of pair it with some horizontal level. You want to pair it with some actual price structure. So we're at the daily MA 200, but let's set the table because we're still very much doing a throwback, right? So what is a throwback? Well, I have a video on that. You can just go to the encyclopedia and look for throwback. It's right there. It's like the ninth most popular video or whatever. You can sort it by newest, or popularity, whatever you want. You can sort it. There's hundreds of videos. So we're doing a throwback, and a throwback is when you have any kind of resistance level. Let's say, let's do it like in this case. So you had the price come up, and it did what's called an inverted head and shoulders continuation. And you're probably familiar with the regular head and shoulders, shoulder, head, shoulder. Now, an inverted head and shoulders, shoulder, head, shoulder. Now, you can have it, normally you think, okay, it's a reversal, right? It's a reversal, neck baseline, breakout, measured move, all that good stuff. But you can actually have it as a continuation. And my colleague Axel, at Bitcoin Live, he writes like the classical charting stuff for CMT, talks a lot about the continuation variety. So as you see here, so essentially you have a move up, set a shoulder, come back, set a head, and then set a shoulder. And let's say it lines up roughly like that. And what you have up here, it's called the neck baseline or the neckline. Okay, so that's what we did with Bitcoin. It breaks out above and it does a throwback. It's throwing back to broken resistance. So on the weekly chart, of course, we're in an uptrend, right? Price is well above the look at the MA 200 all the way down here, right? Even the MA 50, which has been the bellwether, which has been the most important, price point, moving average price point, at least, since at least 2021. And we're observing the weekly uptrend and the price structure in this throwback posture. Consolidation, breakout, throwback. So we're still doing the throwback. So we're still thematically, right? We're in a throwback on the weekly, and we'll get to your question. So we're in the throwback on the weekly. We know that. And, of course, we're observing price versus the SMA 50, this orange line. And you may wonder, well, Cheds, why is it important? Why are you talking about it? And this will be repeat for those of you who've been to, prior streams, of course. But the MA 50 is a 50-period moving average. You see it here in my moving averages. You see them all here. If you want to know why I use the moving averages I do or what they are, I have a video specifically called what are my moving averages? Somewhere in here. You can just search it. What are my moving averages? What are my moving averages, right? Video 17, right? So you can see what my moving averages are if you want to know the difference between SMA and, EMA. EMA meaning exponential moving average, like the 8, like a short-term primary uptrend type of thing. So the price versus the 50 has been important. And just as a quick reminder, if we observe, the price advance in 2021, and we had this mean reversion meaning consolidation back to the mean, the middle, right? So you have a rising channel and it's oscillating, comes back to the mean, right? Back to the mean, back to the mean, back to the middle. And it generally did that. 2021, it started to lose it. That was a warning sign, failed breakout. This is when I warned that we were going to sub 20K, back in April. So we've been watching the MA 50, and it's been something I've talked about a lot. Twitter, Bitcoin Live, here, even at the grocery store, when I'm buying food, and they're like, "What are you talking about?" I said, MA 50, right? It's been that important. So the price is drifting towards the MA 50, but what's interesting is we have kind of very sideways price action. We're essentially, I think we're almost sideways here for 50 candles. Not that, maybe close to. We'll go back and we'll pick up that tool. So yeah, 50 bars. We're essentially sideways, right? Because we've been doing throwback. So we're essentially sideways. So the MA 50 is catching up to the price. So rather than having a precipitous drop into it, it's just catching up. All these moving averages are sideways. We're super sideways. We're consolidating, but we're above the prior range. We're above the prior structure, still quite bullish. And we are getting close to an important test, which is going to be the price, versus the weekly 50. Let's get back down to brass tacks, though. Let's get to the daily chart. Let's kind of, measure it out. Let's kind of mark it out and get a sense of what's going on. So what do we see here? We see the structure. We see the structure here illuminated pretty well that we talked about. The inverted head and shoulders. We see the peak of the range. Okay, that's all still true. We can see that, right? Then we see a couple peaks here. You can draw a wedge, expanding wedge. But for me, this looks like very much roughly the same price zone. So I'm personally more inclined to draw a box, which would be a price zone. And again, we're remembering that, support is not like an exact level, right? It's not an exact number. It's more like a filter around a zone. And so I'm going to go ahead and draw that zone. I'm going to draw the zone in the peak here, very roughly there. You can say there was an upthrust, a false breakout, in October of the August high. Fair enough, but it still generally forms an overhead, a high time frame overhead peak. Why is that important? Well, that gives you something to initiate a new trade on, right? You're always looking for what could be the next trade. What's the next opportunity, right? Because it's 24/7 markets. There's no FOMO. We don't have FOMO because we can always find something. We can always wait for the next trade. And you look what the price gives you. The price gives you that overhead level, and then arguably, I think 117.5 as an overhead level. So we're working our way top down here rather than bottom up because we're still in an uptrend. Top down, I'm identifying these levels, and then the price is messing around here and pushing into range lows, pushing into range lows, pushing into range lows, pushing into this important higher low, low, higher low, higher low, and it kind of lost it, but it's been reclaiming it. But very generally speaking, 107.5. Very generally speaking, 107.5. And you see the price has respected that so far. You see how it's a demand zone, meaning there's demand for coins. There are buyers in this level and have been in this level. So you can see what it would mean to lose that level, 107, 107.5. And it's been chopping around. I had a whole bunch of trades that chopped me out and really frustrated me. Right back here. And I put out a tweet. I don't know if you saw it, but I put out a tweet where I talked about, the market as a way of just like before the ultimate move is made. The market has a way of wearing us down before the ultimate move is unveiled. And it was doing that, where it's just chopping through what seemed like a very clear level, 107.5. Then it dipped below, stopped down. I said, screw it. I'm going to sit back and watch. And then boom, another move right to 115. But it rejected where it was, you would expect it would locally, right around 116. Again, I'm using 117.5 as the overhead because I think it's a little bit of a congested area. I wouldn't use 116.5. But you've got range lows. You've got immediate range peak, which I would argue 117.5. So you have the 107.5, 117.5. You have the chopping around at range lows. And then another push into it and a bounce. And it's a question of, and this is just now we're micro-analyzing even lower time frame action. We started with the weekly, with the trend, the importance of the weekly levels. Now we look at the daily structure. We're looking at the important price zones. We're trying to identify the next potential trade. We have the overhead trade, right? We have the overhead level. What could you have taken a trade here? Absolutely. Because you had a sweep and a recapture. This is called a spring. You had a test. Either whether you call it just a test of these lows, where you're looking for potential, like a double bottom test, a test of a dual test rather. Double bottom, of course, is a little bit more precise academically. There's your low, peak, trough again. Then it's a double bottom when it's breaking out. But here's just a double test, either a double test or observing that as just a spring with the loss and the recapture. And of course here 4H tweezer. We see the tweezer as well. There's also tweezer bottom, roughly equal lows, irrespective of what the candle body is doing. And I, of course, I have a video on tweezer. You can look it up. Again, if I say a term that you don't understand, there's a really good chance I made a 3-minute video for you. So check it out, right? Let's see, tweezer. There you go. Tweezer top, tweezer bottom. And then I have a video tweezer top, tweezer bottom. And then I have other videos coming out just in tweezer top and just in tweezer bottom with all the nuance, because you can have a tweezer with a hammer. You can have a tweezer, with a shooting star. You can have all these different variations. But you could have got long here on the retest because the price is retesting a higher time frame level. Daily range lows. You could have very easily been on 4 hour or even 1 hour, and you could have said, I know I want to go long because it's an uptrend, weekly. And I'm just going to, as soon as it starts to sweep and recapture, you can go long because you can define your risk pretty nearby. You can say, okay, it recaptured this 106.7 level, even though it's 107.5 is the price zone. When you're at a key level in classical charting, you're going to drop to lower time frames, right? And you could be on the 4 hour, 1 hour, and using this structure, these dual wicks here. So even on the sweep and recapture. So that's fine. These are all trades. This is all technique. There's a question of what do we think long-term is the top end? Should we look at the monthly? And then there's the trading, the nuance, the just maneuvering between these different time frames, depending on what you're doing, right? And so again, we know what to watch in the weekly. We know what to watch in the daily. Certainly 107.5. We know the overhead level. The monthly candle is closing. And what do we think about the monthly? Well, it's a consolidation candle. It's an indecision candle, right? We have a spinning top here. Whether you want to call it a high wave is debatable. High wave for me, I think you need to see a much longer shadow, certainly lower shadow. I think the upper shadow qualifies. It's really just a spinning top. And again, a spinning top is just a small candle body. This is a spinning top. Doesn't have to look like this, where you classically think equal upper and lower shadow. Just any small body is a spinning top, like even a hammer, technically a spinning top. And it's a sideways. It's just more indecision, more consolidation sideways. We see attempted bounce back into the range, but we see on the monthly candle the throwback as well. And we see in the monthly candle price versus the EMA 8. So on the monthly looks really good still. The monthly looks really good. I'll get to your questions, your comments, folks. Thank you. I'm just kind of ranting here. I'm on a roll, or I'm not on a roll. I'm on a roll, not being on a roll, whatever you want to say. I'm just having fun. Get to your questions in a second. So the higher time frame you go, the better it looks. And you can try to draw divergence. I saw someone doing like an RSI divergence. That doesn't really do much for me, because for me, the price leads, right? What do we see? OBV looks good. OBV matches the trend. And just a mild, super mild divergence, on the RSI. Just super, super mild. And again, I think you're going to want to use a line chart if you're going to want to draw divergence. Line chart works really well, right? Here's the candles. And why does the line chart work well? See if you know this answer. If you're a good student, you know the answer. So line chart connects the closes. It just connects all the closes, okay? Divergence, you draw based on the candle body close. You see people doing it all the time, where they're using like a wick. They're trying to draw it, from like wick to wick instead of body to body. That's a mistake, because all oscillators, an oscillator meaning it's oscillating, moving in between overbought and oversold, or a centered oscillator, or a bounded oscillator, which this is, for example, or unbounded, like like an index like the OBV. These don't calculate till the candle closes, right? So you never draw divergence on the wick. If you see someone doing that, let them know it's being done incorrectly, which is why you want to draw a line chart, right? And if we go to the monthly chart and we do this line chart, you can see, very, very, very mild, at best, divergence with the RSI. But you can also argue a bullish divergence, because you got a lower low here. A hidden bullish divergence. Lower low, higher low. That's a bullish divergence, which means the price has gone higher while the RSI has cooled off. So it's a wash for me. I don't really see anything there that's going to concern me, in terms of divergence, right? So that's daily, weekly, monthly. We did 4 hour. We did 1 hour. We looked at a lot of different time frames, and I'll be able to circle back to your questions here in just a little bit, okay? Let's go to Ethereum. Ethereum 3850 is kind of the level I want to see hold. It's chopping around there, and that's based on, the September 25th low, but we're seeing based on this wick structure, there is buying demand, expressed around 3750. So I'm comfortable shifting back down and now using this as the bottom of my immediate range. And I had put out a tweet here on Ethereum right when we were at 4850. And you can read the tea leaves on my tweets, okay? And not only, because I'm not trying to be like mystical. I may be wearing a mask. That's kind of mystical. But I put out like keywords to make you understand. And again, the trading encyclopedia, like underside, like Trump coin bounce into underside lost support. I took a short here and I'm doing really well on it. And when I say underside, that's telling you this is a short setup because it's a bounce into lost resistance, right? So that's a clue based on the words I'm using. Taking Ethereum, I talked about here. And I put out a tweet. I basically said Ethereum and 4250 level. And in this tweet, I'm pointing out support. Should have been support, turned into resistance. Didn't hold again as support, resistance. So it's into a very key pivot or support resistance pivot, right? Right around 4250. And I put out a tweet at 4180 or whatever, basically telling you, and a little bit of an upper wick already, saying like, hey, this tweet tells you two things. It tells you if this level flips, you can take a long. You can also take a short here because it's a well-defined level to bounce right into a well-defined level. And so you want to see that flip, and it rejected, I think, predictably, and it's back to, a reasonably well-defined demand zone. 37.50, 42.50, right? Solana, I wanted to see it hold, didn't hold 195, needs to hold here around 175, 170, 175. It had a couple nice bounces off that DMA or daily MA or DSMA, daily SMA 200 range. This was just from a little lecture I was doing a Bitcoin Live about candle body progression. So you want to see that hold 175. Let's get to the chat room. And then, I just said a lot of things. So I can try to clarify it for you. So let's go back. What's up, Andrew? Influence operator. What's up, Terp? What is going on? Dr. Gabriel, Jimmy, John, Zen. Nice to see everybody. And if you're just listening, feel free to jump in. You just join the chat. I'd love to hear your questions. So let me try to get to these questions like top down. So let's see. So B. Caro asked about hidden bullish divergence. Is that a thing with the OBV? No. So I talk about this in my video. If you go and look for if you look at the divergence video, you're going to want to watch this. This will explain regular and hidden. And then I have a video specifically on the OBV. There it is. I have a video specifically on the on-balance volume. The on-balance volume is measuring the volume in the green versus the red candles, right? So here's why it works for RSI, right? So if the RSI has a series of lower lows, but the price has higher lows, the RSI is cooled off and reset while the price has retained gains. That's bullish for continuing, right? It's a continuation divergence. There's no scenario where it's better to have lower lows in the OBV because it just means that you're getting counter trend volume. What is counter trend volume? Again, I have videos on volume and counter trend volume, volume on consolidation. I have a lot of videos on subtopics of volume, but counter trend, if the price is rising and you've got green candles, there's some red candles in here. If you get big volume on the red and light volume on the green as it's rising, it's counter trend volume, and the OBV will start to fall and no longer be confirming the price. So you like lower lows in OBV and the higher lows in the price, it's just bad because you have a divergence. You have unsupported new highs by the on-balance volume. OBV only works for regular divergence. So that answers that question. Somebody had a good comment, and I'll address it. From John, said essentially like I had $400 in this play, and now it's worth $200. Would you cut your losses or not? And it's like a very, and then they said at the end after we talked, they said, sorry, it's a basic question, but it's a good question because we all go through it. We've all been there. It's just such a common thing. So it's also the wrong way to think about it. Like you shouldn't cut because it's at your position size is worth a certain amount. You should cut because your trading idea has failed. You should cut because the idea you've entered the trade no longer exists, right? I have a million quotes in this, and I published a book on quotes. I didn't even mention, I made that book free in the Trading Quotes playlist. It's my third book, right? And by the way, I didn't even tell you, I'm not even like trying to sell stuff. I published a trading journal book. You can buy all this stuff on Amazon. I'm making them all free on YouTube. And if the reason you entered a trade no longer exists, then you now have a reason to exit the trade, right? So it's not like, oh, my $400 is now worth $200. What should I do? Well, that just depends. Like, what was your plan to begin with? And your stock. And I was just talking to a guy on Twitter who was talking about Litecoin. He's just going to dollar cost average to 1,000. I'm like, bro, like, well, when are you? I asked him, what's your stop loss? He didn't have one. He said, I'm not going to need one. Well, I don't know about that. Like, you have to know when your idea fails. You're going to ride something to zero, right? Your stop loss is when your trading idea is invalidated, right? So whatever this ZK Sync or whatever the $400 position was, you entered for a reason. It wasn't just, oh, I like it, right? It should be, I like it because it's above 100, whatever let's say it's above support. I like it because it broke out. Well, if it does this, just get out. You don't just hold it down and say, well, now, and start looking for a new reason, right? So you should never be, and like with stop losses, and I talk about this in Trading Wisdom, Part 1, I talk about Trading Wisdom Part 2, aka the Trading Journal. Your stop loss, it shouldn't be like, I'll sell when I'm down $200. It should be, I'll sell when my trading idea fails. I'll sell when it loses support, or if I'm shorting, I'll sell when it, breaks back up above resistance. So you got to reorganize your thinking. Your stop loss, your entry, none of it should be based on this dollar amount. It should be based on the chart idea, the trading idea. Because Otherwise, how do you define it? How do you know when you're wrong? Like, if you don't give yourself the ability to say I'm wrong, you never grow, you never learn, you'll never survive, man. You gotta like, it's like when you start dating, and maybe it's different for everybody. And, you know, for me, like, I went on a lot of dates before I met my wife, and I wanted to know, do I like this person? And so I would just meet someone and I'm like, cool, see you later. I didn't like spend all this time with every date trying to make it work. I just knew, like, this isn't it. This isn't it. Let me go next. And it's like, can be like that with trading. And my stop loss was like, I don't want to be around this person. It was just that. That's it. I'm just not interested. There's nothing happening here. There's no chemistry, right? So with trading, don't just be like, I'm in this trade because I read in the forum that they have a partnership with Google. Like, that's just nothing. That doesn't mean anything. That's just words. Words are wind, right? To quote, George R.R. Martin, words are wind. It's just whatever, man. It's like dust fart. It's a fart in the wind. All right, that was that question. Hopefully I did good value. Gave you guys a good value in that one. We talked about that. Next question. Andrew wants me to look at copper and aluminum. All right, sure, brother. I'll leave it on this watch list. So let's go to copper. I don't know the symbol, like copper futures, like CF1 or something like that. I don't know. But we'll just do it here. Copper, and this should give me, and there's like the spot versus the futures contract. There's all these like nuance with what you're looking at. But I'll just look at copper right here. All right. So what do we think about copper? Let's go to the weekly chart. Something like this, like a very mature, a little mature asset. And especially if I ever pull up a daily chart and I see this, I don't really get a good feel for it. I need to step out. You should always know if you're trading in the 1 hour, you're trading in the 4 hour, you want to know what the daily and weekly are doing, right? And so I always want to step back out, get a sense of the trend, and then I'll drop back down and look to define my risk. I'll drop back down and look for, some price structure, okay? So what do we think about copper? Yeah, it's a nice bullish chart. It looks good. I like to see it hold over $5, right? Hold over this price structure. It'll zoom out some more. Yeah, this is clearly a bullish chart. I'd want to be long here. I don't really have too much more to add to it other than I like the chart. And aluminum, I've covered this in the past. I mean, that's gorgeous. That is a beautiful breakout. That's your red light, orange light, green light. Beautiful bottom in here. You may spend all day trying to name this. Just a rounding bottom, right? People get all stuck in the name. Is it an Adam and then an Eve and then an Adam and then no, it's just a rounding bottom. Okay. Broke out of the peak, well above it. That's a bullish chart, Andrew. Okay. Influence. Can I look at Tau? Sure, man. Let's look at Tau. Let's check it out. What is it? Tensor or something? Bit Tensor. Okay. Let's go to there. I believe it's been a beleaguered chart, but that's a nice little bounce. So I actually didn't know Tau was this strong over the last couple weeks. I'd kind of taken it off my radar. I think I can get more history though on another exchange, and I'm going to try to do that. Okay, there we go. So there we go. All right, so it's been strong, but it's right there, man. So this is an interesting chart. So this is the concept of price interaction with a key level. Right? So you can spend all day long, let's say just a very general example, the price is here, and whether it dropped into this range or it advanced into this range, and of course it will that does matter because, for example, if it rose into this range, you're taking longs in the bottom, you're not shorting the top, and if it dropped into the range, you're taking shorts at the top and not long in the bottom because, again, we're trading with the trend. But regardless, if you have some type of a move into this range, you want to play interaction with the key level vis-a-vis the top or the bottom, the well-defined range. Because if you spend time in the middle of the channel, you get it chopped out. You'll put the market maker's kid through college, and then you'll buy a yacht for the market maker. Here we have very clearly defined price level. We have something in classical charting. We have multiple time points. We have what's called time interval in between these time interval, boom, and then another time interval between here, and then time interval here. Just a really super duper well-defined level. If I wasn't doing a video, I might be taking a trade here. Which way would I take it? I'd probably take a long here. I'd probably take a long here, looking at this structure, and I would set my stop loss. I'd probably set my stop loss at like 450, somewhere in this range, right? Because I wouldn't stick around forever. But it's flirting with the high time frame breakout, and I like that. And you've got rising demand from this low, price drop back, set a higher low. Now it's trying to break out. This is actually not a terrible looking chart. Not a terrible looking chart. All right, let's go here. Sour, please. What's sour? And by the way, I covered Bitcoin in the beginning, and I'll get back to it at the end. For those of you just tuning in, we talked about the weekly, the daily, the weekly price versus the 50. We talked about generally the throwback. It's still very much in a throwback posture to the prior structure. Talked about the daily levels, 107.5 and 117.5 above. What is, you asked me to look at sour? I don't know what that is. So you're going to have to, operator, you're going to have to reframe that request. I don't know what you're talking about. Okay, Mr. Ben says, Cheds, do you think Trump coin is still a good short here? I actually just added to my short earlier because it bounced. I'm going to go into the 1 hour. So I saw the bounce, and I saw the potential for a lower high here. So I actually added on shorts a couple hours ago, just using this wick for that second tranche. So sure, I think it's reasonable. Just don't get married to it. You know what I like about it, you still have price interaction with the key level. You're right near the level where we'd no longer hold a short, 850, 860. So yeah, I think it's quite reasonable. Absolutely quite reasonable. I looked at Andrew. You want me to look at coffee now too? Man, I'm looking at all this stuff for you. I'm drinking coffee. Let's see, coffee futures. And again, I'm not like Peter Brandt, Dr. Brandt, I like to call him. I don't look at like commodities, and there's definitely like a different, or my colleague Dean, who's the wizard, I like to call him. See the light. Yeah, interesting. Kind of looks like Bitcoin before the breakout. Inverted head and shoulders. This is bullish, man. Interesting. This is bullish. And any bull thesis, here's your right shoulder. This is a right shoulder. If it loses it, you can take a short. Right shoulder invalidation. Any bull thesis, that's your stop loss. I do like the price structure. This looks good. This probably continues higher. Absolutely. Let's see, Jimmy, what's going on? Oh, no, hold on. Dr. Gabriel wants to know, Cheds, what do you think about charts of meme coins like Doge or Pepe? Well, we can look at those. I think it just depends on the chart. And a meme coin, even though it's complete vaporware, it doesn't matter. I'll trade it. I'll trade anything. I really don't care if it has price history. I will trade it. It's a shit chart. I'm sorry to be vulgar. If your kids are watching, I apologize. It's a poo-poo chart. It's a terrible chart. I've not been bullish in Doge. And I put out a couple tweets to that effect and had people kind of clowning on me, which is okay because there's a lot of Justin Beliebers in that one. But this is just not a good looking chart. There's no trend. It's sideways, but it's below arguably a falling MA200. I just really hate the chart, so I would just not touch it. Meme coins can do well, right? Like XPX had a nice run, but it's on this way down. I'm in a short on this one because it's just, I'm in a short from like the 105, 110 range. It's just way too much. And it's also it's just spooky, parabolic, cult behavior in this one. Like, it was funny. People were saying there's no chart. It's two of the biggest red flags for me. Is number one, they say just believe. Well, you should never believe, right? Because as soon as you believe in anything, you're giving yourself permission to ignore losing support or to ignore some type of a risk management practice. Number one. So I have a tweet on that, a huge red flag when someone said just believe in it. I mean, that's okay. I gotta go. I'll see you later. The other one was saying there's no chart, which is absolute dog poop. Again, complete nonsense. Of course there's a chart. If you can buy it and sell it, there's a chart. If you have any kind of history. And the reason people say there's no chart is because their position's underwater, right? You say there's no chart. Oh, the chart doesn't matter because your position's underwater. I had to take a short. I was just blown away with red flags. So, but I digress. for a while, this is a great trade and had been quite bullish. I'll trade meme coins. I'll go long on them while they're bullish. I'll do nothing when they're ranging, and I'll short them like this one when they're heading down. Okay, that's my opinion on quote unquote meme coins. But of course, it's going to be chart by chart. It's going to be level to level. All right, we'll see if we get the close below the MA 200. Here on Bitcoin, we had our bounce off of that level. We have our bounce off of the sweep and recapture into a lower high. MA20 tag. The question is, do we get a higher low here somewhere, right? Do we get a higher low to this low, right? You need to have rising demand, for any type of an advance, all right? That covers that question. Jim, I'm trying to answer all the questions today because it's a holiday weekend. I hope everybody's doing well, by the way. I haven't said thank you in the last 10 minutes, so I want to say thank you again for being here, everybody. I really do encourage you to check out the Trading Encyclopedia. I made this for you. 3-minute. If you have ADD like me, you're going to love these 3-minute videos. You might have always wondered, how do I use a Fibonacci retracement tool? Well, here's a 3-minute video. Oh, Cheds tweeted out about a hanging man candle. Well, here's why it's actually bullish. 59% bullish continuation, right? Go watch these videos. How do I do multi-time frame analysis? What's RSI? And my best-selling book, The Trading Wisdom, I put the whole thing for free in this playlist. 3 minutes per lesson. So Jimmy wants to know, my idea is to go long on virtuals. Okay, I was looking at this one the other day for Bitcoin Live. Virtuals. Man, let's get going. Hope everybody's having a great day, great week. So your comment was, Jimmy says, I want to go long on the virtuals at 142. Okay. 142. Okay. Crossing the daily MA200 would create an uptrend, plus it breaks resistance roughly 140. I mean, that's fine. I think it's reasonable. Here's what I would think. I mean, what you have here is a strong advance. There's volume. There's accumulation. You like that, right? That's a good, I hate it when I try to grab the pointer and it does that, which is all the time. So you have a strong advance. You have a corrective phase, but then you clearly have some accumulation and volume, which suggests a changing of trend, a changing of momentum, and you have a recapture. Then you have an attempted recapture, but a failed hold. So based on the fact that it attempted to break and failed to hold here, you should be a little bit cautious. But if it can recapture it, you can use that to define your risk. You can go long here. But I would, for me personally, probably let it retrace a little bit. And again, to use fibs, I can just eyeball this. This would be like what the 3.8, or like the 3.8 level, roughly. Oh, it's 50% retracement roughly right here. So I'll let it, sometimes the eyeball works, other time it does, but I'll let it drop to right about here. Let it consolidate. That's where I would personally, because I'm a bargain buyer. I don't like it that much. It's not that great. So I'm not going to take a suboptimal entry. I'd rather miss it and then mess around here where it's chopping through this level. I'd rather just drop here and use this as my target area. And that's personally how I would play it, okay? Andrew says the interview with Dan was awesome. Would like to see one with Bob and Peter. But Andrew, I've already done those. Andrew, look. Bob and Peter, here's my interview with Bob. Here's my interview with Bob. Here's my interview with Peter McCormick. Here's my interview with Peter Brandt. I've already interviewed my other colleagues, so I want to get new folks first. I love Bob and Peter; they're like epic. But I've already interviewed them. This is a market update. Had never done a proper interview with Dan Chartman. And this guy, by the way, this guy's awesome. You got to watch this video. He's someone I've said it before. I look up to him a lot, so check that out. Okay. All right, let's continue on. Let me get caught up with the chat. Great insight. Thank you, C. Spala. CP Saila says, in such a market, I keep in mind your words, the best moves come after everyone has been liquidated. It's really true. And, when you get these big volatility events, they're just so tiring. You just number goes up, number goes down. It's all so tiring. It really can be tiring. And these types of events will just defeat you. And even here, where it chopped through that level, it kind of sidelined me. I mean, I'm not saying like me, like I'm a wizard, but I mean, it will do that. You have those liquidation events. It knocks people out, people give up, and then it clears the books and the price can move. So very much so, the best moves often come after everyone's been liquidated. Major protagonist, what's up, man? Cheds, how do you identify support and resistance so easily? Practice. It's just a lot of practice, but It's a lot of practice. It's just I've read textbooks, man. So I've read classical charting textbooks. I've read Japanese candlestick textbooks. I've read CMT2 textbooks. I did the CMT1 course or whatever, and I'm doing CMT2 at some point. So it's just practice, and it's stylistic, and it's debatable how you draw the levels. I draw mine based on really a blending of Eastern and Western TA, and I walk you through that, of course, like in the Masterclass webinar. I don't even mention the Masterclass webinars anymore. They're just a great playlist because I have the Trading Encyclopedia now. But I have a video I'm scheduled to record on like just how to identify major support and resistance. And I feel like I've already done that, but I'm going to do a video just very specifically on that question. Okay. Litecoin 8,000, maybe. Would I look at Aave? Sure. Let's take a look at Aave. I think it's been losing. Yeah, it's a tough chart. I kind of wish I had a short on Aave, certainly on this bounce from a few days ago. So Aave does not look good. I would rather be a bear than a bull. I wouldn't want to be holding a position. It's probably going to do another leg down. I'd say Aave is probably going to drop. Just my best guess. It's probably going to drop down into this range. I don't like the chart. Andrew, I can't look at gold, man. I already looked at copper, palladium. Let me get everybody else. All right, I'll look at gold because I know a lot of people are interested in that. The question was, how long do you think gold might go before finding support? Well, it's already started to establish support, 3,900, 3,950 range. But it really shot up here so quickly. I mean, it's scary to think it might have to go all the way back down to here. But if it does, it would be a very beautiful entry. Some structure there. It's very hard to handicap, because it's still very much a bull flag, at this point. So I still think you don't want to bet against the trend. Doctor said that was a great interview. That's how I found you. Thank you. And I've worked with Dan for a long time. I really highly recommend Dan to my entire feed. Resley says, can you look at the BTC weekly and monthly? Seems like a bear divergence. I already talked about that, right? So just as a quick review, for example, like on the monthly chart, and you can draw a divergence with the RSI, a bear divergence, but you can also draw a bullish divergence too. It's a kind of a wash. So essentially, and again, reminding you want to go candle body close to candle close. This is called a mild divergence. I have a video on this. Because again, there's three types of divergence: strong. I haven't had enough coffee. There's strong, there's medium, and there's mild, and it has to do with I might get this wrong because I'm a little bit, my brain's a little fried. But for example, like where you have higher highs in price but flat highs in the oscillator, that's a mild divergence. Higher highs and lower highs, strong divergence. Flat highs in the price, lower highs in the oscillator is a weak divergence, but it's still divergence. Like there's gradations of divergence, right? And again, I have a video on that. I'm not sure I've done specifically this video, but I have scheduled to record it for the Trading Encyclopedia. But it's a mild divergence, and you could also call it a bullish divergence because you have higher lows but flat lows in the RSI. That's a hidden bullish divergence. So we're not really getting any information here. Okay, on the monthly for Bitcoin, okay? It's got to be the same thing for stochastics. It's just a little bit slower. Stochastics and RSI, stochastics is a little bit faster because stochastic just boom, 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 boom all the time. Bounded oscillator, topping off, overbought, oversold. I really don't find much use for it. I have a video on stochastics. I don't know if I've released it yet. Stochastics, yeah, it hasn't been released, but I've recorded it. I think it's scheduled to be released like in December. Or something, but it's going to be the same thing. You're going to have a mild bullish divergence as well, balancing out the mild bearish divergence in RSI. It doesn't mean the price isn't weakened. We know there's a consolidation going on. We see the monthly spinning top. We understand the weekly just completely flattened out. Price is catching up to the MA50. I mean, it's still in a consolidated phase within an uptrend. So there's understandably some caution, maybe some rollover, but we're not getting information, at least in my read from the RSI, okay? Ken says, I'm late, but I'm here. What's up, man? Thanks for chilling. Thanks for hanging out, brother. Ched's not crypto. Can you look at FTT? Sure. What is FTT? Is it first something? Finning. I love looking at charts. It looks like it's OTC. I love Canadian. What is it? TSX Canadian, right? I love looking at charts that I've never heard of before. This is a mega beautiful chart. I'm not sure what you need from me in this one. I mean, you don't need to be a chart nerd like me to tell you this is a mega bullish, beautiful uptrend. TTT looks beautiful. I don't really have much to add other than looking really good. I'm zooming out. Blue sky breakout. If you're in it, I'd say congratulations. Pepe, let's take a look at Pepe. Frankie Pepe. Let's go to Pepe. Let's go here. I believe Kraken is going to be where we'll look. Hope everybody's doing well. Happy Halloween. I remember when I was a kid, I loved Halloween and dressed up as Spider-Man and I really dressed up as whatever I could just to keep getting the candy. And I think I probably went till I was like 15, 16. Because, who doesn't like those big Reese's and Snickers and Almond Joys? Man, I'm just getting hungry thinking about it right now. So Pepe looks bad. I would just not touch Pepe. I would not want to be in Pepe. I would stay away from Pepe. It is bearish. It looks like it's even doing a descending triangle, flirting with the breakdown. You could, in theory, take a short if it loses here. I'd rather be a bear than a bull. It's a very, very weak chart. Don't like it. Don't like it. Hopefully you're not holding this. Hopefully you have nothing, not even $1 in this. This is a bad chart. I looked at SOL already. I talked about SOL. Somebody requested SOL, 175, want to see that hold. Also confluence to the rising daily MA200. Rough overhead around 195, but it's been chopping through there. Okay. Hey, Steve. Cheds, I've been following you since 2020. I'll do one or two more. We'll wrap it up. This has been a nice stream. Really appreciate you. 50 minutes. This is much longer than normal. And my coffee's getting cold. Oh, H-bar looks rough. Yeah. Just don't touch it. Don't touch it. And she had a beautiful short setup a couple days ago on the bounce and the underside. I'm kind of mad at myself for not watching it. I took it off my list because it just really started to break down. There's more support more history on Binance. Yeah. Okay. Yeah. So, I'm kind of mad I didn't take a short here on this bounce into lost support. It's not good. I don't like it. I would much rather be a bear than a bull. I would avoid it. That being said, you want to always check your thesis. And so if I'm a super bear, where would I maybe change my mind? Well, I think certainly here, if it can recapture, get back up above like 23 cents, I think you could take a long. But until then, I would just completely avoid it. Drifting back down towards support, maybe chops around here. Not much of a trend, but it's slightly drifting lower, so a slight bear trend. You're welcome, Arnik Rexa. And I'll do one more. Bitmine, sure. BMNR. And I'm about to wrap up. Any last questions? This is your chance to fire them away before I switch it up. And then I'll be back maybe Tuesday. But if not, Friday. I stream once a week, okay? Yeah, Bitminer looks really good. It's a nice bullish consolidation. I still like the coil. Maybe want to see it hold a little bit, tiny bit higher, but this is a bullish chart still. This is still very healthy consolidation in my view. I'd much rather be a bull than a bear. I'm going to wrap up by talking about Bitcoin, Ethereum real quick. Just to remind everyone, check out the Trading Encyclopedia. 3-minute videos designed to teach you professional technical analysis. I've studied it and I'm teaching it to you for free. I'm trying to take that complicated academic and make it easier for you to understand. It also makes my life easier when I tweet stuff out at Big Cheds, of course, on Twitter, and I put out words. People, what does that mean? Pullback, local, what's a tweezer? I now have videos I can just link. Helps me out, helps you out. We can grow, we can learn together. Check out BingX, my favorite exchange. I've been with them for 5 or 6 years. Great experience with them. Bitcoin Live, I'm a founding analyst. I've been with them for 8 years. And twice a week, every Wednesday, Sunday night, I do a full market report. No matter what's going on in my life. I'm traveling, I'm sick, I'm on vacation. I haven't missed one in 7 years. I'll skip YouTube. I'll never skip Bitcoin Live. If I skip Bitcoin Live, something's happened to me. And check out all the great stuff. I had a great interview recently. I published 4 books. I try to make them free. You can get them on Amazon if you want. If you do, thank you. If you don't, watch them here for free. I'm recording the audiobook for Trading Journal. I'm almost done with that. And then I'm going to start on my next book, which is a poker and trading crossover book. And I'm really excited to not only write the book, but just go play some more poker and get back into that. So that's all that good stuff. So Bitcoin, you want to, again, starting from the higher time frame, the weekly time frame, we're still very much generally in the throwback posture to the prior inverted head and shoulders. It's been in this case for several weeks. And that's still the case. And an important delineator, in my view, is the 107.5 range. If that fails, really need to see the 98K, 98.5K zone, higher low hold. If that doesn't hold, I'm going to start to look much lower and reanalyze how I'm looking at things. But in the interim, in the meantime, you're still looking to buy the dip at 107.5K range with your next best, in my opinion, overhead right around. You can use 110. I think that's reasonable as well. I think Fibonacci Ghost, whatever his name is on Twitter, had asked me. I think 110's fine. That would be kind of based on more local levels. But I think 117.5 would be much cleaner. It's not sexy. I know you're missing a lot in here, but you get very well could get chopped out. Now, if you took the long here on the sweep and the recapture, your risk is pretty well defined, and you want to see a higher low. So now we're watching, do we get a higher low from this, 106.5 range test? But the daily range is roughly 107.5. That's an area where you're dropping to lower time frame. You're looking for structure. And Ethereum 3750, 4250. If it breaks 4250, I would definitely take a long. So kind of keep that one on your radar. All right, that was a lot. We're at 50 minutes. Happy Halloween, happy Friday, happy life. Thank you, folks, for being here, watching live. Thanks for rocking it out with me. If you're watching a replay, thanks for chilling with me that way as well. And let's dance. Let's dance together. Church of Eight Wheels. We'll get some music going, and we will go from there. So, folks, thank you so much. And let's do it.